This is the only technical analysis video you will ever need to watch. This is going to be full in-depth showing you how I can get payouts like this almost every single month using this strategy. If you want to download or review everything I talk about here, there's a free course I'll tag down below in the description. Other than that, let's get right into it.
This right here will probably be my most favorite video, guys. So the first video, we talked about the theory behind my strategy. This video, we're gonna talk about everything to do with analysis, right? How I actually read the charts, what tools I use, how I use these tools to make bias, right? To get a good read in the market. Now, the third video, right? The last video is going to be how we use what we learned today and what we learned on the first video or the first episode, right? To build setups, to build a plan, to build entry triggers and things like that. But without further ado, let's not get ahead of ourselves here. Let's keep it super simple and let's just jump right into it. Right? All right. So the first thing you'll have to understand about my strategy is the simplicity of it, right? Every good strategy is super simple, right? The only things I look for, right, are my key levels. Number one, right? I check my key levels. I look for market structure, just a simple trend, right? We're going to talk about all these. We're going to break them down: volume by price analysis and order flow, which is just reading the tape for my entries, right? That is it. Nothing complicated, no lagging indicators, no chart patterns, no candlestick patterns, nothing like that. Now, first things first, right? The key levels I use. So this is actually where I will allow myself to take a trade. Now, if we're not in a supply or demand zone, I will not take a trade no matter what, right? I will not trade outside these zones. So another key level I look for as well is liquidity, right? And now I use these if they're in supply or demand zones. If they're not in supply and demand, I can use them as a take profit level, right? Other than that, these liquidities act as magnets in a good place for price to reverse. We'll also talk about these. Now, supply and demand, right? I'll show you how I draw them really quickly. Super simple. People get these really confused for some reason. It's a simple thing to do. So what supply and demand zones, right, is just showing us where the smart money has set, right, has been sitting. Every time you see a big move down or a big move up, that is hundreds of millions of dollars making this move. So we know all the orders getting filled in right before the big move up or down are where their big money is sitting, right? So we're talking about how to draw them and how to use them. The time frames I draw these zones are 4 hours where I start. I go down to the 2 hour, the 1 hour, and the 30-minute. Then very rarely will I go down to the 15-minute. And I'll show you an instance where I do that. These are the time frames I look at my zones for. So I start on the 4 hour. The larger the time frame zone, or the longer the time frame, right, the stronger the zone will be. But I look all the way down to the 30-minute to make them smaller and smaller and reduce my possible entry levels. Now the big move, right? The big move just means volume, right, and momentum, right? So what I look for is a massive big body small wick candle over 20 points on ES, 40 points on NQ, the two things we trade if you remembered from the last video. If not, you should go back and watch that. 2 to 3 big / medium sized candles with big bodies and small wicks to classify. So if I don't see that on the move down or up, I'm not going to make it a supply demand zone. If you have any kind of confusion, right, whether it is a supply or demand zone, it's probably not a supply demand zone, right? That's as simple as that. If you're confused about it, it's probably not a zone. So for supply, let's talk about how we can actually get these drawn. All right, start on the 4 hour, identify the big move down, right? Identify consolidation, equal highs, or one neutral candle. Just means, you know, price opened near where it closed or price closed near where it opened. That's what a neutral candle means. On top of the zone, this is for supply, right? Top of the zone be high of the wick, bottom of the zone be bottom of the body of either the neutral candle or the consolidation period. That is it, right? Repeat that all the way down to the 30-minute time frame. It's as simple as that. All right, so for example, right here, what do you see? A big move down, right? Where would this zone be, right? What do you see here? Consolidation before a big move down. So what do we do then? We put the top of the box, the top of the wick, bottom of the box, the bottom of the consolidation, and you get this. You get your supply zone. All right, here, right? Some people would get this confused. Is this a supply zone? Yeah, we see what? 1, 2, 3 big candles on the way down, one neutral candle before this big move down, right? So we get the top wick, bottom body. That is a supply zone. Now for demand, it's basically the same thing backwards, right? 4 hour, that's where we start. Identify the big move up, right here, one candle, 1, 2, 3, one candle. Identify consolidation, equal lows or neutral candle, right? One neutral candle or consolidation before the move. Bottom of the zone, this is swapped, right? Bottom of the zone for the ES, or not the ES, for demand will be the bottom wick. Top of the zone will be the bottom body of the consolidation or the neutral candle. Again, repeat this all the way down to the 30-minute time frame. What do you see here, right? Big move up. What do you see here, right? A little bit of a consolidation before the big move up. So what do? We get the bottom wick, top body, that's our demand zone. Super simple, right? Now for the 15-minute zones, when there is a huge move down on the 30-minute and you don't see any zones, or up obviously, you can go down to the 15-minute and you'll start to see some zones, right? So this whole way down, all you see is a zone up here, right? But it's such a wide, such a like 100-point move that you see a bunch of other zones in between that you can look for positions off as well. Y'all can't read that, but that's what it says right there. All right, now that we talked about these key levels, let's talk about market structure, right? There's a couple of market structure we're going to look for here, right? There is a balanced market where buyers and sellers agree on price, right? Just consolidation, equal highs, equal lows. There's a bear market, right, where sellers are in control, lower lows, lower highs. And there is a bull market where the buyers are in control, higher highs, higher lows, right? Let's talk about a bull market real quick. So a bull market looks like this, right? I look at the 4-hour time frame to identify the structure, clearly an uptrend, right? For me to be sure that it is a bull market and we're an uptrend on the 4-hour time frame, I want 3 higher highs and 2 higher lows. If I see that, bull market, right? And then when we are in a bull market, I'll mostly look for an A+ setup, right? That'll be long off demand or a break of supply and a retest of supply for longs. All right, we'll talk about this in the next video when we talk about all the setups. In a bear market, right? Same exact thing, but to the other side. We want to see 4 hours, a downtrend, 3 lower lows and 2 lower highs. And what we're doing when we see a bear market coming in, my favorite kind of market, by the way, is a short off supply / a break retest of demand. Now, let's open this up right here. Every single morning, I go into my Discord as well, and I'll post my, this is for free, by the way, I'll post my daily levels. So right here, I mark out all my supply and demand zones. I tell you the trends, and I also tell you my plan for the day. And I also post my super important key levels. You can join this for free if you want to. It's down in the description below. But if you want to learn for yourself, right, what I recommend you do is all your own zones, find your own structure, and then go look at mine to make sure it matches. Now, a balanced market, right, some people actually get this a little bit messed up. So for a balanced market, right, 4-hour time frame, we're looking for consolidation. What I want to see to really confirm a balanced market is 3 equal highs and 3 equal lows again on the 4-hour chart. Simple. Now, this is key in my strategy, right? I'm looking to fade the 30-minute structure into the 4-hour time frame structure for the best possibility of winning, right? Identify the 4-hour structure, identify the 30-minute structure, then you look for key levels. What a bear fade is, and I probably coined this term, is I'm looking for a 4-hour bear market, right? Then I'm looking for any sort of uptrend on the 30-minute chart into a supply for shorts, right? Or on the other hand, we can go for any breaks and retests of demand. We'll talk about that in a little bit too. Simple stuff though. Now in a bull fade, same thing, just backwards. We're looking for a 4-hour uptrend, right? And then a 30-minute downtrend into a demand for longs. Super simple. Now going against structure, if I ever play against this structure, I want to wait for the 5-minute structure shift first, right? So let's say in this example, right, the market right now is super bullish, trend is bullish, and we're pushing into supply. I don't really want to short if the market is bullish, but I still will sometimes, right? There's A+ and A- setups. Now, if I'm going against structure, what I would want to do most of the time is wait for a structure shift first. This is on the 5-minute chart. Same exact structure for 4-hour, now it's doing 5 minutes. So on the 5-minute chart, we're making higher highs and higher lows. Whenever we break that trend, whenever we make a new low out of supply, now if we come back into supply, I'm comfortable taking this move to the downside because the 5-minute structure started shifting. I have a little bit more of a bias. If you don't do that and you go against the structure, you will see yourself getting kicked out a lot. The trend is your friend, guys. Now, the market sessions are also pretty important when you talk about what you trade, right? The session you trade affects the instrument you trade. So I use sessions highs and lows for liquidity, right? So very, very important. These are my other key levels. Now, the liquidity I use, right, the session lows and highs, London, Asia, New York, open, and New York close, and at least sometimes I'll have liquidity marked at equal highs and lows, 2 to 3 will give me some nice liquidity levels to look out for. Quick example, right? The market peaks liquidity, right? It can be used as an entry trigger, and if you combine it with supply and demand, it's killer, man. So right here we have the pre-market low. Right here we have the New York session open high. Right here we have not only is the New York close high, but it's also equal high. Right down here we have the close. So down here we had the New York close low that got swept. Market reverse. Right here we had the equal high. So oh no, this actually got swept right there. It's really small, so I couldn't see it. So you can kind of tell how good the levels actually are, right? There's equal liquidity levels that actually get stronger, as you can tell from this example right here. So what we're seeing is equal level here, equal level here. Actually wicked it up. It was also the highs for the day. Whenever we actually swept those equal highs, the market came back down and just tanked. Now let's talk about the volume profile, guys, and I hope you were able to understand everything I'm talking about now. Any questions, just ask them down below. So the next thing I use to read the market will be the volume profile, right? This is how you read the volume profile right here. So what you're seeing is, right, as you can plot this on any chart, no matter what broker you're using. I look at the volume profile, right, and the gray histogram you're seeing right here shows me the volume per price point, right? So every single tick, every single price point on the graph, I see how many transactions happen at that specific price point, not the specific candle, right? The specific candle is what most people see, and by that what I mean is when you have this up right here, right, You're looking at the candle volume, right? You don't see the volume per specific price, which for me is honestly more useful. So that's what the volume profile will show. So the gray histogram, volume per price point, the blue area, right? That's 68% of the most volume that's been traded during that day. So the blue area will highlight for you where 68% of the volume is at during that day, session, or whatever time period you're trading. The yellow line, my favorite little line here, is called the point of control. This is the exact price point of the day where there was most amount of transactions and most people are participating and the heaviest level of orders coming to the market. Again, we want to play with the big money, so knowing where that is super important. So the volume profile analysis gets a little bit different as well, guys. So it can be used to strengthen bias, right? I also use it for point of control trends, and then gap ups in the volume profile is super key to determining bias. So by that, what I mean, right, if you see the volume profile have a new value area, a new point of control that gaps down every single day, right, this is every single day, you know the volume is getting those lower price points, you know people are interested at the price points, you know the market will continue to go to the downside, right? Same thing on the other side. You see the points of control and value areas get higher and higher every single day. You can just tell the trend is super high to the upside because the volume is being transacted at the higher end of the market. Now, I'm gonna say this all of the time, right? Market is an auction, right? Its main goal is to advertise price and facilitate trading. So if people aren't trading, there's less volume at higher prices, right? The market will then go down to advertise itself at a cheaper price so people come back in and play some more. Right here, right, you see this is kind of how you can balance the market. If you see the volume points of control are in a similar little range, good bias for your balanced market. Now, something I love the volume profile for, right, will be this virgin, that's what she said, virgin point of control line that comes from that. Now, what this is, right, all it is a point of control that was untouched after the session is closed at 6 p.m. when the futures market closed EST, right? And if it aligns with supply and demand, which most of the time it does, it increases any setup amount over 10%. I've had years with the data, so 10% is a lot. It's a lot. This line, if y'all are in, if you follow me at all, if you're in my Discord, you know how effective they are. If you guys also want a way to make money while you learn, because trust me, you won't make money at the start from trading. It's very, very hard. You can go on my Discord and I'll actually post my trades. I'll signal them out to you, and I trade live every day, so you can come watch me trade live and just copy my trades while you learn. Don't just, copy just like we're going to work out. Make sure you're learning and knowing what you're doing. I post signals pretty much, every day. Win, sometimes I lose, right? That's what trade probability. So I'll show you my trades and kind of hop in. If you follow trades, obviously you'll make the same amount of money I do. But if you're interested, I'll put that shit down below in the description. Now, let's go ahead and move on to the next one. I'm going to show you how actually these VPOC levels act, right? Right here is a point of control that was not touched after this day was closed. Come back in, we touch it, and the market sells off. So it's very, very well respected, right? Control line right there, touch, sell off. And I just kind of mark these with the line. So that is pretty much it. Super simple on that side. So the volume indicator is the next thing I use for volume. Volume is a big thing. I use a couple of different things for volume. What this is kind of showing you, ultimate volume profile here. So I'm showing you, it's breaking down the volume by buy/ask orders, right? Not by seller buy volume, because in reality they're the same thing. Volume, just volume. And I use to draw zones. So if I see big volume coming out of a zone, it just strengthens it more, right? Also can be used for volume by price analysis, right? What were we talking about just now, right? Volume by price analysis. If you see volume die off as the move is going up, good chance it will reverse. If you see volume pick up as the move is going up, good chance price will continue, right? These are the tools I use for volume by price analysis. Footprint chart, book map, volume bars, and the volume profile. We talked about these two down here. These two are going to come here in a second. Now, for volume by price analysis, this is what I use it for, right? If I'm looking off supply and demand, I want decreasing volume. If I want a breakout of supply and demand, I want increasing volume. Simple. Using the volume profile here, by the histogram, you can tell as we got up into supply, volume died off. We get a sell-off. Again, as we push up into supply, volume died off and we had a sell-off, right? Same thing with these volume bars, right? Pushing down, volume died off, pushed up, right? Pushing up here, volume died off, then we pushed down. Simple again, guys. Now let's talk about probably the only lagging indicator I use in the stock market. And this is going to be called VWAP, the volume weighted average price. And I use this line as basically a take profit level, and that's pretty much it, right? But it's very well respected because it's used by many institutions, right? It's respected. A lot of people use it, and it's my take profit level. That's what it is most of the time. These are the settings I have for it, right? So I have the deviation of 2 and -2. Time frame is a day, and I don't plot the upper and lower band. I'm just interested in VWAP. Simple, that's it. Now, for instance, if I went short here, right, VWAP would be a target for me. That's all I use it for. Now, we actually learned about this on the first episode. So let's recap it really quickly, right? Ask versus bid, right? The bid is the price that buyers willing to pay for an asset. The ask is the price that sellers willing to accept for an asset, right? When you put a market order into the market to buy stock, right, it will get you filled at the ask. More expensive price because the market order, you want to get in right away, right? You get filled at the bid, right? If you're a seller and you want to get out right away, you'll sell for a cheaper price. Hence, you're being aggressive. So all market orders are aggressive. Limit orders, all the passive ones sitting in the market, two important orders you need to know, right? So level 2 data here is pretty important, right? It shows the behind the scenes, right? It shows the offers hitting the bid and the ask. It shows the open limit orders, the stop orders, the quotes, the spread. It shows you everything that has to do with what's actually moving the market, right? The footprint chart and the book map are my two favorite tools to read these, but you can use the depth of market, level 2, and times and sales. All work great. But without further ado, let's hop into some order flow knowledge here, guys. The first thing we're talking about is book map. Bookmap's one of my favorite order flow tools. And all this is, guys, is again super easy. The green bubbles are the market buy orders hitting the ask, right? They're the aggressive buyers. Every time a green bubble comes up, it'll show you the number once you hover over it. And for this instance right here is 61 buyers, aggressive buyers that hit the ask at that price point, right? The red bubbles, just the opposite. All the ask, all the orders hitting the bid, the aggressive sellers, all these red bubbles. The bars you see in the chart here are all the limit orders, right? That's all it is. If price is above the bars, right? Price is above the bars, then the ones below it, not price above the bars, right? Sorry about that. If the bar is below price, it's a buy order. If the bar is above price, it's a sell order. Simple as that. I messed up a little bit there. And again, the darker the red these bars are, the actual more orders that are sitting there. So I have a book map on Thinkorswim I use sometimes, and it'll actually show you right here. There's 356. It'll be darker red. This is the kind of the gradient here. Now for book map, right, the order book on the side that I just showed you, that was the amount of orders that are actually sitting in the market, all the passive orders, right? The time frame, so you can actually zoom in and out of the book map. So there really isn't a specific time frame to look at. I could just zoom in and out as my day is going out. If I want to do a larger time frame analysis, I'll zoom out. If I want to do kind of see what's going on zone, a little bit more intraday, I can zoom in and see the exact offers. So you can do a lot of different things there. Something I would recommend you do is have the chart volume profile on here as well, so you can kind of see it changes as I zoom in and out. It just shows me all the orders for the current chart I'm looking at to make it a little bit cleaner, easy to identify when volume is dying out. So we're going to use bookmap to read the relationship, right? What relationship, Elder? Between aggressive buyers and passive buyers, and all the ones that you can make a combination out of those four, right? So I'm only going to look at it when I'm approaching a key level, right? I want to see huge amounts of passive orders. That's one thing I'm looking for. I'm looking for big aggressive buyers or sellers failing to move price up or down. I'm looking for trap players, right? If price will move up if there are more aggressive buyers and passive sellers, and price, again, vice versa. I'm not going to repeat that again. Y'all get the hang of it by now, right? So absorption is kind of going to look like this, right? Two examples here. Buy side where you see aggressive buyers into passive sellers and the market moves down, right? Sellers are in control. We have sell side absorption where aggressive sellers into passive buyers. You see aggressive sellers into passive buyers and the market moves up. Buyers are in control. So what you can kind of tell by looking at, right, a bunch of aggressive buyers. Yeah, right here you can tell there are more passive a bunch of aggressive sellers, but you can tell here there's a bunch more passive buyers because the market moved up, right? So easy way to look at it is right here when you see a lot. This is a little aggressively selling the market, yet not all the passive buy orders here get filled. So what that tells us is there's more passive buyers, so the market must move up, right? Right here's the same thing. We have a pretty big aggressive buyer right here hitting the big bid right here. So this is actually sitting in supply and demand. It's perfect. So we kind of see the buyer put to the limit order, but not fill all of them. They're still sitting here, so the market starts to move down because there's more passive sellers up here than there were aggressive buyers. Simple as that. Now, so if you see aggressive buyers that they're filling these passive orders and getting rewarded, prices moving up with them, that's what getting rewarded means. They're in control. So every time you see a buyer fill a sell offer and price moves up, fill a sell up, and it keeps doing that, they're in control. You see the seller come all the way back down here, a huge seller, right? And price moves up against him, right? He's not in control because he did not move down. You see an aggressive seller like this hit a price point and not move down, buyers in control. You see all these buyers fill these sell offers and move up, buyers are in control. That's how you use a book map to read what's happening, right? If aggressive sellers fail, aggressive sellers are filling passive buy orders and getting rewarded, prices moving down, they're in control. Same thing you'll see here, but just backwards, the opposite direction. Now, the leftover orders is pretty important too, right? Because this is how we can see if buyers sellers fail to fill all passive orders, right? So the market will reverse. Again, I'll repeat this multiple times. So the more passive buyers and aggressive sellers, the market will move up and vice versa, right? Right here, did not fill all the passive orders, even though it got hit by a decent buyer, market moves down, right? Right here, don't know what happened yet, right? So don't act like this is like a perfect execution software, because not. This got hit. Are we going to move back down? Or are we going to hang out above it, right? You can use this to read relationships. You can use this to read the intraday action. I even use this for execution and entry triggers sometimes, but you got to just not drive yourself crazy by looking at it 24/7. Only at important key levels. The limit orders is another big thing here, right? If they match the zone, I just talked about it, and you see it get partially filled, like the example we just talked about, perfect, right? That's exactly what we want to see, absorption and supply. Let's get the market moving down. Now, the delta is a big number that I talk about a lot. We're going to get a little bit more deep into it when it comes to the footprint chart. But to look at a delta, right, all the delta is giving us is the average, whatever time frame you're looking at. You can change it to whatever you want. I use the 5 minute in my opinion. It's giving us the all the aggressive sellers the aggressive buyers, and it's giving us the difference per 5-minute candlestick. So see who is in control during that time frame, right? And I'm going to use the delta here for setup. So to get the delta on the book map, you just hover over the bubbles. That's it. Now, a footprint chart, my next favorite tool to actually performing analysis to do with order flow in the tape, right? So we're going to look at the bid-ask offers, imbalances, and the volume by price per tick. Very key here, per tick. Again, same thing with the volume profile. Now, what to look for on the footprint chart is going to be big positive and negative delta. It's going to be trap participants, and it's going to be interest in higher or lower prices. Kind of the same thing comes to the book map, right? So a footprint chart, right, will kind of look like this. More examples in a second here. But it's the same thing as a candlestick chart. I'll show you the open, the close, the high, low. I'll show you all of that. But what it will show you that the candlestick doesn't is everything that's going on inside, right? On the right side, it'll give you all the sellers, all the offers hitting the bid. On the left side, it'll give you all the buyers, all the offers hitting the ask. Right, and this gives you the exact number, right? Some of them have multipliers, some don't. Now, the delta, the D right here that we just talked about, is the difference in market buy orders and sell orders, right? So let's say in this candle right here, there was 1,600 more aggressive buyers than there were sellers, right? Simple. The V is just volume per candlestick, right? And you can kind of look at look how big the blue bars are. You can actually get the volume per tick per candle, which is crazy. Now, absorption, right? When we talk about absorption, what I'm talking about here is seeing all these aggressive buyers fail to move price up. With the footprint chart, you can kind of see 1.9K, 1K. You can see all this millions of dollars of aggressive buyers sitting here, yet price did not move up with them. So what must happen when there is a bunch of buyers and price don't move up, does not move up, right? There's a bunch of passive sellers sitting right here, selling into them, and the market moves down. You kind of see aggressive sellers come away, right? Now, what I look for absorption, there's a specific number I kind of look at to kind of keep my data safe, right? On New York Open, on the ES, I'll look for 3K positive or 3K or more delta. If I see 3K delta on supply, I know that's absorption. If I see 3K delta in demand, I know it's absorption. And NQ, I look for 1.5K or more, obviously, on the New York Open because there's less volume. You can also use this footprint chart to tell when sellers and buyers are getting weak, right? So if you see a 50% right here decrease, more than 50% plus decrease on aggressive sellers as they're making down and start to consolidate, you can tell they're getting weaker. So you can use this for a lot. My personal favorite with this is kind of using it to read volume tick and also for the absorption and just anything tape reading in general. Because if you miss something on level 2 in time to sales, you can't go back to it. You miss something on the footprint chart, you can easily go back to it. Another thing you can look, another really good tool or another really good usage of the footprint chart is the volume dying out as well, right? Use it for volume by price analysis, and I also use it as an entry trigger we're going to talk about in the next episode. So right here you see the volume down to the zeros, right? The zeros, really subtle. Nothing. You see these blue bars, no histogramming. The volume died out here twice, so you know nobody wants to trade down here. So what happens when nobody wants to trade, right? Price must move up. You can use it for aggressive follow-through, so just tell who's being in control, right? You see the price leave a zone, negative 1K, negative 2, negative 3K, right? And the price is still moving down with them. They're getting rewarded. These are aggressive sellers that are getting rewarded. There's no passive buyers. You're holding them up. You can tell they're obviously in control, and the market will continue to move down throughout the day. Now, absorption plus aggressive follow-through is a great little indication as well, right? You see 8K delta push into this zone, 8K. Right, it's a lot of aggressive buyers stepping up here, ready to buy the market up. Yet nothing happens. The market does not move up with them. Right, the next candle comes up here, and you see an aggressive seller hop in. Right, and the market starts moving down with the seller, so you can tell the sellers are in control. Right, again, you see some buyers coming up here, but what happens? Nothing. Right, nothing happens. Simple as that. The market does not move up; it continues to go down because the sellers are obviously in control. Now, guys, that is it for this episode. I hope you guys learned a lot, man, and that is it. Don't worry about the setups for now. If you can understand exactly what these tools are, how I read them, right, how you can use them to just read the market, don't worry about setups, entries, any of that just yet. That's coming in the next episode, so make sure you subscribe so you don't miss out. Without further ado, let's head out.